It is the worst way you can possibly try to paper over a disaster like this. It is absolutely disgusting what they've done to this country just so people can maintain power. You're going to need many, many iterations of helicopter money to keep the illusion going. And again, it's very destructive. It's not stimulus. It's eroding the base, the foundation of the economy, and it works ostensibly until you get inflation. And inflation is the great revealer. And no matter what power you think central banks have, they cannot battle for very long the free market. So when they finally achieve inflation and you see the global bond market revolt, so in other words, prices start to fall and yields start to rise inexorably, that's when this game ends, because then there's nothing the central banks around the world can do. That's going to be the great reveal. The veil will be ripped and torn asunder. And then they will have to say, okay, I have a choice. I can continue to print money and hyperinflate the economies into oblivion, or I can finally do the ultimate deflationary collapse, which you talk about a great reset of the currency and a resetting and restructuring of debt, which is going to be massively deflationary. And it will wipe out many people for a very, very long time.
Welcome back to Liberty and Finance and Reluctant Preppers. We're delighted to have this returning guest. Michael Pento is the founder of Pento Portfolio Strategies. He joins us again this Tuesday, July 28th, 2020. Michael, thanks for joining us again on the show.
Always a pleasure to be on with you, Dunnigan.
Approaching the end of July, we're treading on, I guess, eggshells in some ways, because we've been listening to some analysts, including Alistair McLeod, who's been talking about the possibility of a coming banking crisis. He's been seeing strains in the banking system, and certainly we've been seeing an eruption in the price action of gold and silver, which sometimes correlates with awareness, sort of growing sentiment about concern in the financial markets. So could you give us sort of your top risk assessment, the overall view that you're having of the conditions that we're facing at this point, and then we'll get into some specific viewers' questions.
Well, what I find most striking is that the U.S. economy, the European economy, the Japanese economy, Chinese economy, the major money centers in the world were insolvent going into the Wuhan virus outbreak. These were insolvent entities. And they were kept alive like zombies off of the lifeblood of central banks, falsifying interest rates. And then you come into the outbreak of the virus, and we see that in the United States, for instance, we never really had a deficit over $1.4 trillion. This is the apex of the deficit in the wake of the Great Recession. And now we have deficits in the United States on top of an insolvent pile. We're already at well over 100% debt to GDP. You have deficits in the United States that were, I was shocked, agog, use your word, agog, $4 trillion national deficit in 1 year. And now we're going to add, at a minimum, another $1 trillion to it, predicated upon the Republicans' fourth coronavirus COVID-19 stimulus package. Now, if the Democrats get their way, we're going to add over $3 trillion to a $4 trillion deficit. And I'm not saying all the money is going to be spent in this fiscal year, because the fiscal year ends the end of September. But you could say that we're running 20 to 25% deficits as a percentage of GDP. And as I like to say, we have a debt now that's 830% of our revenue, and we're adding to that debt 130% of revenue each year. So forget about being able to pay off the debt using your revenue. You're actually adding to that debt at an eye-popping over 100% of your revenue each year. I mean, that should scare the bejesus out of everybody.
That just sounds like a death spiral to any household or business or enterprise that's running their books that way.
And then again, what are we getting as a response from government? It's like, who can outspend the other person? So I was recalling back in 2008, the first TARP bill was $700 billion. It failed because Republicans and Democrats couldn't agree to spend that much money to rescue the economy. Now we have a situation where $2.5 trillion in 3 months. This virus came in early part of 2020. The CARES Act was passed in April. And now here we are back at the table in late July, trying to do another $1 to $3 trillion package. Is that going to be enough? Because I'll tell you this, it isn't going to be enough because the hype around the vaccine from the deep state of Wall Street is disgusting. And no one really wants to look. Here I am. I'm not a virologist. I'm not an epidemiologist. I pray that this vaccine that's coming is going to be highly effective. But the evidence out so far is ambiguous at best. What the experts are saying is that this vaccine is going to look much more like the flu vaccine than it is, say, for the measles or for polio, which is very unfortunate because come November, you're going to have whatever iteration of this latest stimulus plan wear out. Okay, so the one we passed in April, has already been spent. PPP loans have been spent. $1,200 helicopter money per every living adult who doesn't make $200,000 a year, married, filing jointly, $198,000. They got their money. The children got the $500. Now we're going to do that again. That's all going to wear out come the fall. And then you have this vaccine, which everybody is so, ebullient about. And then we're going to find out, wait a second, Dunnigan, what percentage of the population is going to take this vaccine? The polls show that what I've learned is that about 50% of this population wants no part of this vaccine, or they're at least not sure. In fact, if you look at the people who are either for sure not going to take it or not particularly thrilled about it, don't know what they're going to do, that's 75% of the population. And then if it's like 50% effective, like the flu vaccine, you're not going to talk about some magic bullet that goes away in the fall, like we were promised would happen. So now you're just left with massive balance sheet destruction, a lingering Wuhan virus, and an election that may or may not go so smoothly. We have a situation that I've never seen in my life where you see state governments against mayors, against local governments, against the federal government. I mean, people are actually involved in physical confrontations.
Oh, you didn't mention privately funded instigators thrown into that mix too, fomenting interstate riots and that sort of thing. So
yes, so this country's if anybody believes that we can just borrow and print our way into nirvana, they're going to be very sadly mistaken because it's just not going to happen.
I'm going to piggyback on one thing you said about the virus a vaccine that's been proposed. We saw stories saying that on the second round of trials, there was 100% side effect rate among those who received it. We saw another story saying that the third round of trials, they're admitting it's RNA modifying, so it modifies the actual RNA within your body. And Fauci said, well, even though that's a new technology that's never been successful before, I'm not particularly concerned about it. And we also saw stories saying that it's going to be, in some cases, perhaps mandatory for certain civil privileges. And specifically, an example story coming out of Africa saying that MasterCard has been collaborating with a vaccine company there so that they could have COVID cards, basically providing a facially hashtag recognition / history of people who have or haven't received vaccines being able to transact. So that tying of your ability to transact, and okay, you can't mention that without mentioning the push for a cashless society. My own son, who was an avid coin collector, actually, I have to make an analogy, just like people go prospecting for gold nuggets in a stream bed by looking through the sand and the rock and looking for gold nuggets. He would prospect through unsorted bunches of pennies from the bank for years, looking for solid copper pennies from the right range of years. So he ended up amassing this like 70 pounds or more of these copper pennies. He took them back to the bank, finally having decided, okay, I'm done with this, I'm going to let it go. Took them back to the bank. They wouldn't take, our own bank wouldn't take coins anymore. All of the officialdom is all backing away from the use of cash. Many merchants are backing away from cash. So just in that whole milieu
Right.
of forcing us into transacting in the electronic system, which can be potentially denied in the future if you don't show demonstration of. And the other thing you mentioned about 50%, on a good year, 50% effectiveness of a flu vaccine. On a bad year, might be like 20%.
Yeah. Well, I could talk for about 3 hours. What you I have to unpack a little bit of that. So first of all, it's very biblical what you're talking about here. You're saying that I won't be able to buy or sell unless I have some kind of identification that allows me official access to this. So that's the first thing. Yeah, I mean, unfortunately, I'm not as upbeat as the mainstream media is about a vaccine. Many people aren't going to take it because we're let's just look at history here. It usually takes multiple years, Dunnigan, multiple years, not only to display efficacy from a vaccine, but to make sure you don't do any damage. The swine flu vaccine ended up killing a lot of people. Wasn't a very high percentage, but a lot of people were dead from taking the swine flu vaccine. So are you going to be one of the first people to run out and get inoculated from this new technology, which is going to be applied to a novel coronavirus? By the way, there's never been a vaccine ever in the history of ever, a successful vaccine that actually worked for any type of coronavirus. So, I mean, again, I'm not happy about this. I'm just trying to be logical and say, well, if this is the case, if we're not going to be, I mean, if November 2nd comes out and we have an FDA approved vaccine, and November 3rd, everybody gets it, and then November 4th, we all book an airline plane ticket. This is the narrative from Wall Street. It's just not going to happen. So, like I said, usually takes years. And here's what I find very mysterious. I find it very alarming, if not almost nefarious in nature, or at least orchestrated, if I can use those words, that you had a novel coronavirus appear in January. Within weeks, we had the genome sequenced. And then several weeks after that, we had a vaccine all ready to go into trials. And now everybody and their brother has a vaccine for this virus that supposedly works. Have you noticed? Moderna, Sanofi Aventis, I mean, Johnson & Johnson, Pfizer, I mean, go on and on. Everybody overseas, everybody has a vaccine that works, even though it's not going to be properly tested. Don't tell me it is, because the government's plan for this vaccine is called Operation Warp Speed. Now, they assure me that it's not cutting any corners, but forgive me for being a little reticent.
Well, even the standard by which they would state that they're not cutting any corners, let's be cognizant of that, in that the FDA, when they issue approvals for other vaccines that are generally regarded as safe or whatever, or more beneficial than their risk, they test them, when they do, in isolation, not in combination. So if people are, especially children and young people who are getting more vaccines than ever in the history of mankind, regardless, those are not tested in combination. So even if they claim that they're testing this one, and they say they're not, they're going to fast track it. In my previous professional career as an engineer, my boss had a saying that sticks with my mind. He says, there's a difference between go fast and go reckless. And warp speed certainly sounds like it falls in the second cat.
Yeah, when you're dealing with, the health of the population. I mean, you're gonna have to inoculate billions of people in order to get some kind of herd immunity, and that's going to happen like within weeks from approval. It's just not going to happen. Which means, and this is where the nexus between what we're talking about and investing comes into play. So we are told, this is not my opinion, Mitch McConnell said, hey, we might do one more fourth round of stimulus, but that's it. He vowed that this is the last stimulus package coming out of the Senate. So if we're dealing with this virus for multiple quarters, if not years from now, we're staring at a massive, unprecedented fiscal cliff in the fall, which is going to occur right around the election. And then you think about, you just have the Fed continuing to buy junk bonds. I mean, that's not really going to be the same as sending $1 trillion in helicopter money out to businesses, corporations, and individuals.
What about that? The word stimulus is it even appropriate? We've heard from multiple analysts that back when you had very much lower debt to GDP ratios and deficit to GDP ratios, that you could actually buy some economic activity by injecting additional currency, and that's in the right places. Okay, two questions. One, is it being injected in the right places? Because we've heard that trillions are going, to the largest banks and that sort of thing, whereas trickles are going to Main Street. That's question number one. Number two is it making enough of a difference? Is it right to call it stimulus anymore?
No. So it used to, a dollar, the Keynesian multiplier. You borrow $1 and you get 1.5 times that in stimulus. That's not true anymore. Now it takes $8 of debt to generate $1 in GDP. So it's completely opposite, because you're dealing with inflation and unproductive lending. So if I think about how I think about as an anti-Keynesian, okay, I don't believe that you can borrow to stimulate an economy unless you're borrowing to do what? Increase the amount of capital goods. Okay, so you're borrowing to get machinery, to get tools, to create and expand productivity. If you don't get that, if that's not what you're borrowing for, and by the way,
share buybacks, executive bonuses.
So if you're borrowing to do something
toxic debt in banks, sorry.
If you're borrowing to engender consumption via helicopter money, so it's not me saying as an entrepreneur, I vetted the environment. I think if I go out and I develop this mine or this utility or this factory, and I think I can produce this, X product and make a profit, that's how you grow an economy. Not if you just tell people, I'm going to pay you more now than if you got a job. So please sit home and lay fallow. That's the most unproductive and asinine form of stimulus you can possibly get. So you're not growing the economy, you're growing consumption, which cannot be sustained.
It's almost like the exact thing you would do if you wanted to submarine a people and a nation and an economy and the world are being done. We're releasing prisoners, we're sending COVID patients back into nursing homes, we're paying people to stay home and not work, we're shuttering family-owned small businesses in favor of these huge mega big box stores, monoliths, putting some people, crushing their dream that they just launched or one that they had perhaps been nursing along for generations as family-owned businesses. It's like, what would you do if you were trying to write a recipe of how you would destroy the middle class?
Well, it's all about the hubris and arrogance of government. You nailed it there, Dunning. It was very well said. So, the idea was from arrogance, human arrogance and control, is that we don't need recessions anymore. That morphed into we don't need any more downticks in the stock market. No more bear markets, no more recessions, no more bear markets. So now we're stuck with the Fed and the ECB and the BOJ, Bank of China. We're all stuck at zero and in some form of permanent QE. So, that's the only way that the debt levels outside of public and private sectors, that is the only way that debt is anywhere near solvent, is if the central bank buys it all. That's the sad, and there's no escape. That's the sad state of affairs around the globe.
We have a question here from Devil's Advocate Survival, who asks, will there be a sudden total collapse or will it be a slow burn, the proverbial boiling frog, although it feels like we are slowly coming to a boil now?
Well, okay, so there's going to be, this is the formation of my company. So, I run money here for a living, and the predicate that I base the model on is that you're going to have rolling series of inflations and deflations. So cycles where you see, a spike in inflation and Wall Street benefits. The primary position here, is Wall Street. Look how all the money BlackRock made. They had a great quarter by what? Serving as a conduit for the Fed to purchase junk bonds and investment grade bonds. This is the kind of the bifurcation that we have between the rich and the poor. So you have iterations of inflation and some semblance of a zombified growth. And then the Fed's going to have to eventually back away from that. And we've seen that many iterations of this over time. They back away from monetization. They start raising interest rates. the whole economy collapses. We saw that in 2018 and 2019. And they kind of come back in. And every time they do that, with each iteration, we get more and more towards the zero bound or negative interest rates. And the Fed's balance sheet and all other central banks' balance sheets increase. So forget about ever draining the balance sheet. It's never going to happen again. In fact, you talk about, going back a few questions ago, what's going to happen with currency, physical currency? Well, if you go into negative rates, you cannot have the ability of people to remove their savings from the banking institutions. So you have to eliminate that ability by banning physical cash and currency.
How about other monetary forms like gold and silver as well? Isn't that a threat for to the system if people decide they want off that roller coaster and they want to pull their funds out to something that's solid?
Roosevelt tried that already, and we already know what happened. He stole all your gold and gave it back to you after he devalued your currency. So that's not going to ever happen again without a fight, a physical fight. So the United States knows that, and so does the rest of the world. That game can never happen again, in my opinion. They might try it, but it's going to be very difficult. It'll be door-to-door battle. But to go back to your question from the audience, so we have these rolling cyclical deflations and inflations, but the final blow is going to come where all this phony economy ends, and in a horrific way, is when the Fed and other central banks finally achieve their universally adopted 2% inflation target. As I like to say, is the way they measure it, which is very important. Because if you get 2% on the core PCE deflator, your real rate inflation, headline inflation, is probably closer to double digits. And no matter what power you think central banks have, they cannot battle for very long the free market. So when they finally achieve inflation and you see the global bond market revolt, so in other words, prices start to fall and yields start to rise inexorably, that's when this game ends, because then there's nothing the central banks around the world can do. That's going to be the great reveal. The veil will be ripped and torn asunder. And then they will have to say, okay, I have a choice. I can continue to print money and hyperinflate the economies into oblivion, or I can finally do the ultimate deflationary collapse, which you talk about, a great reset of the currency and a resetting and restructuring of debt, which is going to be massively deflationary. And it will wipe out many people for a very, very long time.
Anticipating the possibility of those two eventualities, what is the most prudent thing that people can do to at least take a step to protect themselves?
Well, I mean, you've been doing this for a few months now, and what you've been telling people to do is the right thing to do. Own yourself, avail yourself of some physical precious metals. You see what's happened to gold ripping to an all-time high. I mean, silver is absolutely, actually now rising even faster than gold was rising. I think that goes to an all-time high eventually, even though I'm more enamored with gold than silver, because silver has that industrial component, but it also has a Joe Biden component too, because silver is used in solar cells. Okay. So I think, if you get a Democrat presidency, there's going to be a huge switch away from fossil fuels and towards sun energy, solar energy. So silver is a big component of that. So silver should do very well too. So that's number one. Farmland. I've always espoused farmland and the precious metals and commodities. So those are three things you can do. But I think another thing you could do, which most people don't talk about, is because we have the most massive bubble that we've ever seen in equities in the history of investing. So just put a number on that. The total market cap of GDP in the U.S. stock market is now 155% of the underlying economy. That's the ratio. It's never been anywhere near there except for outside of the year 2000. March of 2000, it was 148% of GDP. So we're even more insanely overvalued today than we were in the peak of the NASDAQ bubble. And then you throw into all the other bubbles that are in there. You have to think about, how do I capitalize on this? How do I increase my standard of living and purchasing power no matter what happens? So you have to have an active manager that can go both long and short the market at the appropriate time.
In that role, and you do actively manage at Pento Portfolio Strategies for people and provide that service, what risk is there to your ability to perform that role in a potential banking crisis? Does not the actual positioning of, being able to take out short positions against the market at the right time, that kind of thing, doesn't that rely on a functioning futures market and an options market and the brokerages and all that sort of thing? How do you?
So what I just said makes sense until that ultimate collapse happens.
Okay.
You're gonna have these series of rolling cyclical inflation and deflationary collapses until you get, when you get inflation rising way above the Fed's target. By the way, I didn't mention this. I'm glad you brought me here. Is that I said that the Fed wanted 2%. That is a target that's symmetrical. So instead of saying that they want 2%, they want it to be above 2% for the same extent and duration that it was below 2%. So if you were at 0 for a decade, they want 4% for a decade. This is not me. This is them saying that. It's a symmetrical target. So you're going to have a very long battle with inflation, which I think we could make a lot of money on preparing for the ultimate crash in the bond market.
I posed a similar question to Andy Schechtman, the CEO of Miles Franklin, and he has for 30 years made his business about giving people access to purchasing and selling physical precious metals. And I asked him, how do you even do that business if the banking system locks up? If you can't hedge your spot prices on the COMEX, you can't do. He said, I don't have a workaround. Even the ability to do that is dependent on.
Yeah, if banks go under because of this massive restructuring, I don't know how long that's going to last. It could be several years, but it's going to be very disruptive for everybody, the likes of which we've never seen before. It'd be like the Great Depression. And that's only going to happen after central banks say, okay, I give up. There's nothing I could do. Right now, that's the opposite. They can do everything.
Unlimited.
In fact, it's unlimited because they say, listen, we grew our balance sheet from $800 billion to $4.5 trillion, and we didn't generate any inflation. That's them. That's what they say. So they didn't, except if you ignore, college tuition and real estate prices and stock prices and bond prices, all asset prices, you didn't generate any inflation.
Food, medical.
You can imagine the inflation that's going to be generated and the opportunities that exist to front run that Fed bid leading up to that ultimate collapse.
Jack Robert asks, what do you think about the geopolitical environment, China challenge, technology, and oil specifically?
I have never seen, we touched on this earlier in the interview, I have never seen in my lifetime such conflagration between the parties. And it's growing, and I think it stems from the bifurcation between the very rich and the very poor in this country, which was expedited and exacerbated by the Wuhan virus. So, you have President Trump saying that he might not accept the results of the election because of mail-in ballots and Russian interference. On the other side of the aisle, they can say, I believe that China influenced the election, or Russian influenced the election, or whoever, in Ukraine influenced the election results. So, you have both parties saying that they might not accept the outcome of the election. That I find the most dangerous point. But going back to oil, you have a situation now where the U.S. dollar, its dominance in trading across the globe is being threatened. So where I always say, I don't see the U.S. dollar crashing like Zimbabwe currency or the or Austrian Pengo. I don't see it crashing in that regard. But could it lose its world's reserve currency status and not crash against the euro in that Argentina style? But could it slowly lose its purchasing power against other currencies because other nations have decided not to trade commodities using U.S. dollars? Absolutely. So price of oil could be going higher, and I think it should be going a lot higher, not now, but once we start that regime of intractable inflation. Very important, Dunnigan. The primary reason why the inflation that was generated after the Great Recession was sort of confined to Wall Street is because the Federal Reserve bailed out banks. So they only monetized bank debt exclusively. Mm-hmm. We've jumped the shark now. This is the first time that a form, and this is the fact, universal basic income has arrived in the United States. So rather than just buying banks' assets and increasing what they call reserves in the banking system, and you grow the basics, you're growing base money supply, we are now growing the broad money supply. In other words, M1, M2 have exploded in the wake of the Wuhan virus because we're not going around the bank. We're not just limited to Wall Street and the banking system. We're sending checks directly to people. That's where you get your inflation from. And if we continue to do that, you're going to get your stagflation and hyperinflation, or I would say inexorable inflation, much faster.
This question is a little bit different. It's from Pablo Pina, who says, question for Mr. Pento. What got him into the finance world, and when did he become aware of gold as a monetary asset?
So my father used to watch something called the FNN, was before CNBC. And I just, I wanted to watch TV. Back then, there was only a few choices you had. There wasn't that many choices. Now you have Yahoo Finance, you've got CNBC, you've got Bloomberg, you've got Fox Business News, and you've got real alternative, genuine places like this where you actually come, and I can actually talk for a half an hour without being interrupted and derided. So thank you, Dunnigan, and places like yours. So I used to watch it with my father. I was just amazed at the fact that you can make money by basically, it not doing anything. It just is like Wall Street's just one big casino. You put your money on this XYZ, and you actually, next day you make money. I thought I was fascinated by that. So that's what got me into Wall Street. That's I hope I answered the question.
That was the first half. The second half was, when did you become aware in your life as gold as a monetary asset?
So when I was doing and this is back in the early 90s, I was doing a long-term analysis of the fiscal obligations of the entitlement programs. And I realized that this is not going to work. Back in the early 90s, this is like, way before it even became very popular. So I said, you know what? I think that someday the ownership of physical gold, precious metals in general, are going to be key, because there is even back then, no political will to say to people, you just lay in the gutter, you're going to die, or go live with your children. Another better alternative. The nanny state I knew was not going to allow this. So I said, all of this debt, all of these unfunded liabilities are going to have to be monetized. So I said, let me just in case this comes true, let me own some gold. But boy, I never dreamed at the time. Back then the Fed funds rate was like, normal 6%. Total asset prices as a percentage of GDP were like 40%. The total debt of the national debt was like, 50% of GDP. I never dreamed at the time that nominal rates would be zero forever, with the intention from central banks to provide for an inflation rate that's not only 4%, but increases from there, ever increasing, never stops rising. That's where we are. Incredible.
Next question gets back to what we were talking about before, about whether what they're calling stimulus can even be effective as stimulus at all. BKBK asks, if Wile E. Coyote is pedaling in the air above a 1,000-foot cliff drop, how many cases of Acme dynamite should the Fed order?
Yes, the allusion to that, the coyote goes off a cliff and he doesn't know that there's no ground underneath him.
Right.
Listen, we talked about the insolvency of the United States and all other nations. So we have one out of every 5 corporations is now a zombie corporation. So you think about all the bankruptcies that are occurring right now with all of the stimulus done again, and you throw 2.5 plus at least another 1 trillion on top of the stimulus. So you're talking about between $3 to $6 trillion, $3.5 to $6 trillion in stimulus this year. And that's not really stimulus. That's what we talked about. That is unproductive consumption. That is all that is unproductive debt that leads to a temporary boost in consumption. It is the worst way you can possibly try to paper over a disaster like this. It is absolutely disgusting what they've done to this country just so people can maintain power. You're going to need many, many iterations of helicopter money to keep the illusion going. And again, it's very destructive. It's not stimulus. It's eroding the base, the foundation of the economy, and it works ostensibly until you get inflation. And inflation is the great revealer. Once you get inflation going, all of the folly of just to give you a couple of numbers. So we have $72 trillion of debt in the United States, booming amount of deficits. The deficits are 20 to 25% of GDP. And you would think, just intuitively, that interest rates would have to be rising, correct? I mean, if you're issuing that much debt and the economy, the GDP is falling, well, there's less money available there to buy the debt. Interest rates should be soaring, bond prices should be cratering. But there's now $15 trillion. We're almost back to a record, 17. $15 trillion worth of bonds in the world that have a minus sign in the context of insolvent governments and in the context of record debt issuance. So the whole, it's all there. I just laid it out for you. This half-an-hour interview. The nitroglycerin is being poured on the atom bomb, and all the match is inflation. Once that comes, it all ends, and it ends in spectacular fashion.
In the context you just described, Gonzo asked, most experts, I guess he's probably referring to personal financial advisors, keep saying only 5 to 10% of wealth in precious metals. I would feel better with 20% of it instead of being in fiat currency. Your opinion, please.
Okay. So I start with a baseline of 5% physical, not in a Hong Kong vault or Toronto or New York. Physical gold in your possession. That's my baseline. That's what I start at. Now, he mentioned 20. Just coincidentally, I increased my allocation to the precious metal sphere, the whole sector, to 20% about a month and a half ago. So that's the number I have right now. So if you were a client of Pento Portfolio Strategies, that's what you would have. So that includes, some gold, physical allocation of gold, and it includes the miners as well, which are a great leverage play on physical gold.
Michael, if people want to find out more about the services that you provide to keep on top of things for their benefit, how can they reach you?
So my website is pentoport.com. On it, you'll see a link to the midweek reality check. So it's a 5-week free trial. If you don't like it, you don't, it just rolls off. You don't pay me anything. If you do like it, you get, it's $49.99 a year. You get my insights and a 36,000 foot view of when problems pop up in the economy. Are we inflating? Are we deflating? Are we booming? Are we recessing? So you'll get more insight into that. Also, if you want to become a client, if you have around $100,000 to invest, we'll take care of you personally, and we'll take care of you very well.
We've been speaking with Michael Pento, founder of Pento Portfolio Strategies. You can find him at pentoport.com. Is that right?
Correct.
Thank you, Michael, for joining us again on Liberty in Finance and Reluctant Preppers.
My pleasure, Dunnigan.
If you've decided that now is the right time for you to protect your family's financial future by acquiring physical precious metals, gold and silver, I'm delighted to let you know that I have now become a licensed dealer's representative for Miles Franklin, one of the oldest and most trusted names in bullion dealerships. And we can provide you with physical delivery to your personal possession or to professional vault storage or precious metals IRAs. Just email me at libertyandfinance@protonmail.com, and please include your name and phone number in your email to libertyandfinance@protonmail.com. We'll get right back with you and find out how to best meet your needs so that you can either begin or increase your acquisition of physical precious metals now and protect your family's future starting today.